January 17th, 2025. Before I start the actual review, I wanted to go over two trades that, I think they look good to beginners. When I saw both these trades, they're kind of trade that looks good to a beginner, but really just is not a very good trade. And until you stop taking these, you're going to really struggle. And I did mark one of them. I marked it as an always in flip because we have been always in long, and it is a bull flag, but it's really not great to buy above 68. And this is the kind of trade that used to, screw me up a lot. The reason it's not very good to buy above 68, the first reason is that your risk is big. So if you're buying above 68, you have to put a stop below 67, right? So one tick below 67. And if you put your stop one tick below 67, I'm assuming that you're trying to take a swing trade. So my presumption is if you're buying above here, you're trying to take a swing trade, and you're going for 2-to-1 risk reward, and you're trying to get up here. What are the odds that we're getting up here before the end of the day? It's not 40%. It's lower than that. It's really not that great of a trade. You know that 68 is good enough for a second leg, but that's pretty much all you know. So rather than taking this trade, you could buy the close of 69 and then look to scalp out. So this type of trade, really, it's just if you take it enough times, you'll see that it kind of just does this a lot and then it fails. It's much better to just look to buy the pullback or trade the failure or something along those lines. Your risk is really large and you're trading against a tight channel, so you don't want to trade against tight channels. You should try to drill that into your head as much as possible. Do not trade against tight channels. It almost never ends well. The second trade would be the bar 8 short. So I know it's a wedge. You look and you see 1, 2, 3. Yeah, it's a wedge. Great. And you recognize the pattern, but the pattern was not a good pattern. The thing is that, trips a lot of people up is they see a pattern, they see a wedge or they see a high 2 or something like that, and they take it and they expect it to work because they saw the pattern. That's not how trading works. You have to recognize the pattern and then recognize the context of the pattern and then have good calibrated expectations based off of that. So if you're a trader who buys above 12, which is a good swing trade, your calibrated expectation is that you're taking a swing and that we're going to get some sort of entry move up. You're buying relatively high in the range. And when you're buying this high in the range, you probably want the trade to work rather quickly. And so your calibrated expectation is you shouldn't get a bear bar that needs a second leg. Taking the buy here, you probably should not get a bear bar that needs a second leg. And if you waited until then, you would have gotten out below 29, which is a perfectly reasonable thing to do. So the trade I was talking about was selling below 8. This is not a good idea. You have a big gap up, and you should think of the gap as a giant bull bar. If you looked pre-market, there were basically 4 big bull bars on the 15-minute chart that led to this, but you have to ask yourself, does this look like it's going to be a credible reversal and lead to a big bear trend, or does it look like it's probably a bull flag? It's probably a bull flag because of the large gap up. And look at the size of bar 4, a big bull bar closing near its high. Look at the size of bar 7, a big bull bar, right? So you don't want to sell below this bar because you know that 7 needs a second leg. So we're probably going to go at least up here. And that means your stop is very likely going to get run. If you did take the short and you scaled in higher and you scalped out during 11, that's the best possible thing you could have done. But that's difficult to do. And that's why the trade just really isn't all that great. So if you sold below 8 and you got stopped out, you probably should not be doing that. Stop trading against, the always in position and stop trading against the current market regime. It's really just not a great idea. For my trades today, I bought the close of 14, I bought the close of 18, and I exited here. And then I bought the close of 34 and 35, and I exited below 48. My premise was that, well, first off, when you get 3 straight bull bars, if you want to be a profitable trader, trade early legs, trade first legs for second legs. You're not going to be able to replicate this tomorrow, but if you get 3 bull bars, all closing above their midpoints, buy the close and go for a measured move and exit when the other side needs a second leg, and don't trade third legs. So don't take 3 consecutive signals and don't trade third legs. And that's a pretty good way to become profitable. But obviously, it's a little bit difficult and it's going to take a lot of time to learn. But that's a good way to do it. However, I exited below 48 because 48 needed a second leg. It was 3 legs up. It was a bull channel. So 28, 38, and then 47. So that's 3 legs up, and you got to get out. So anyways, bar 1, a bear bar, but a large tail on the top and the bottom. It's a pretty sideways bar, and we have a large gap up. The gap up is large enough that I don't think we're going to go that much higher or have some large bull trend day, but we'll probably go at least a little bit higher. Bar 2, consecutive bear bars, but this is not really sell the close price action. There's a massive tail on 2, meaning traders were more interested in selling the pullback than they were selling the close. So really not that great. 3, a doji bar, a large tail on the top and a large tail on the bottom, and it's a bull doji. So some bears who were shorting the close of 2 hoping that 3 was going to collapse are going to be disappointed in how 3 looks, and they're going to buy back their shorts and cause 4. Probably sellers above 4, but you can buy above 4, but you have to just kind of accept the fact that you're buying, you're buying bar 4 of the day. There's 81 bars in the day, so you need to see, basically what the next 78 bars look like, or sorry, 77 bars look like, and the range is going to expand. You don't really know which direction. It's really early in the day. So if you're buying above 4, you put a stop below 3 and you go do something else for an hour and you come back later and you just see, you come back in the middle of the day. 5, a double top, 1, 5, but after 4 is going to get a second leg up and 5 does not close that strong. We are always in long. Trade with the always in direction. That's the best thing you can do. 6, disappointing, a large tail on the top and on the bottom. And then traders buy back shorts because if you sold below 5, do you like 6? No. If you sold below 5, your expectation was that 6 was going to look like 78 or 51. And instead, it's basically that. So traders buy back shorts, and that causes the big bull bar 7. It's 2 legs up, 3, 7, and then sellers above the high. So 8, a wedge reversal, but it's not a good wedge. Again, I already went over that. Disappointment, 9. Sellers above, though, it's 3 legs up, probably a second leg down from 8. But that's something else to keep in mind too. You have to, when you see a wedge, it just means 2 legs sideways to down. It doesn't necessarily mean a major pattern. And if you sold below 8, you did get 2 legs sideways to down, but it wasn't really very good. And that's kind of the problem with these types of trades. 10, a large tail on the top, disappointing, not great follow through if you bought above 9. And then 11, a big bear bar, but probably more of a buy the close bar than a sell the close bar. We have a big gap up and the bulls have the stronger moves so far. 12, a bull bar closing near its high. Good for the bulls. I think we're going at least a little bit higher. It's a credible swing trade, but you are buying in the mid, like kind of the midpoint of the trading range. So you can take the buy above 12 and you want follow through and maybe a measured move, but you need to be willing to kind of, accept the fact that you're taking a lower probability trade. You cannot buy above 12 and just scalp out. You just can't do that. If you're buying above 12, you should be looking to exit when the bears need a second leg. If you're going to take swing trades, you should be looking to exit when the other side clearly needs a second leg, and that would be bar 29. So, or, you could get out below 25, but it doesn't trigger below 25. It ends up triggering over here on 29, so you get out below 29. But you cannot buy above 12 and just scalp at 5 points because your risk is way too large and your probability is not high enough. 13 consecutive bull bars, a tail on the top and the bottom of 13, still expecting us to go higher. 14, 3 straight bull bars. Again, still expecting us to go higher. It does close above the high of bar 8, so it is a breakout. 15, an inside bar. Sorry, not an inside bar, a pullback and essentially a high 1 buy. But imagine there are probably, maybe sellers somewhere above scaling in, but it doesn't really matter. To me, it just looks like a breakout pullback. 16, 16 is an inside bar and a high 1 buy. It's credible to buy above 16. You're expecting basically immediate follow through. So if you're going to buy above 16, you probably want 17 and 18 to look the way they do. 17, a bull bar closing somewhat near its high, a tail on the top. Okay to be long, okay to be holding long, expecting more to the upside. 18, 3 straight bull bars. So first leg for a second leg for a third leg. That's the key. 19, disappointing, a large tail on the bottom. But again, it just looks like we're starting the third leg. This is clearly a micro channel. We had a micro channel from bar 12 to bar 24. So as strong as 25 was, it's a minor reversal. And now we're probably going to go at least 1 tick above the 24 high. 20, a large tail on the top and the bottom. 21, an inside bar, a high 1 buy for the bulls, but it's possibly like 3. 22, another bull bar or another bull close, a large tail on the top. And then 23, a really large bull bar, but it's climactic. It is 4 bars up, 20 through 23. However, this is a better sell the close bar, 23, than it is a buy the close bar because we're way above the moving average and it's a late leg. You don't want to trade late legs. So rather than buying this close, putting a stop below here, it's probably better to sell this close and put a limit order down here and a stop somewhere up here. I did that yesterday. I faded my system. Technically, the system that I created, the 4-bar micro channel, tells me that I should buy the close of 68 and go for a profit target up here, except for the fact that my stop would be down here. So I would have a 10 or 11 point stop and a 6.75 point profit target, and it's a third leg up. So this is not a good buy the close bar. It's actually really, really bad buy the close bar because your risk is large and your reward isn't that great. And because it's a really bad buy the close bar, it's a good sell the close bar. So I sold the close and I put a stop up here and a limit order down here. And that's the thing, is when you start trading these in this sort of systematic way, you start to figure out, what your system is good at and what it's bad at, and then you start to figure out how to fade the things that it's bad at. 24, disappointing. A doji bar, disappointing follow through if you bought above 23. A big climax bar. 25, an outside or a giant bear bar, really just means we're probably going to start going sideways instead of up. 26, an inside bar, a bull bar closing somewhat near its high, probably sellers above for a second leg, and follow through on 27. We might go a little bit higher, but ultimately I think we're going to pull back. 28, probably outside down, but a large tail on the bottom, not really that great. A little bit more to the upside than down. And then 29, a bear bar closing near its low. So that's the disappointment bar. I think bulls get out. 30, a doji bar, disappointing follow through. 31, it really just looks like a bull flag. So it ends up being a bull flag. But the thing is, the channel down from 24 to 31 is relatively tight. So I think it's a little bit less likely that we end up getting a large rally far above the bar 24 high. Additionally, there's one other really key thing that hasn't happened, right? What do bull trend days have? What's the most common thing that I've shown, especially in my folder, that happens on bull trend days? And especially, it's missing today. Clear open gaps. We have smaller gaps. We have a gap here, 12, and we have a gap here, the 15 high and the 18 low. But, excuse me. But these gaps aren't all that great. They're not, you look for bigger, better looking gaps, especially earlier in the day. So I don't think it's all that good to be, it's okay to be long up here, but you're not expecting a big bull trend day. 32, a bull bar, but a large tail on the top and the bottom. And triggered above 31. So 31 is the wedge, but you better to wait for a bull bar closing near its high. Consecutive bull bars, 33. 3 straight bull bars, 34. Reasonable to buy above 34. Follow through 35. So 4 bars up, okay to buy the close. I added on the close of 35. I actually forgot. I don't know if I mentioned that, but I told you guys I got out below 48. 36, another bull bar. So 5 straight bull bars. 37, doji bar. It's a bear bar, but it's probably going to act something like a doji because it's a small sideways bar. 39, 38 outside up, and then 39 an inside bar. It just started to drift sideways. And essentially what you're waiting for up here is, first off, that this is the spike and this is a clear pullback. So we're in the channel phase. Leg 1, pullback, leg 2, and we're getting another pullback. And if you get a bear bar closing near its low at any point, then we're probably just going to be in a trading range and we could drift all the way down to the bar to the 31 low. So it's really not all that great to be holding long up here if you're not willing to exit below a bear bar closing near its low. And then obviously we got a leg 3, but we ended up getting a reversal down. 48 closing near its low. So you get out below 48. You can probably sell below 48, but I don't personally sell when we haven't had any closes below the moving average. But anywhere where you start logically exiting longs is usually an okay spot to short. 49 consecutive bear bars, probably going a little bit lower. And then 50 buyers at the moving average, but it's for a scalp. After 48 and 49, they're going to get a second leg. So that's why we get 51. Bulls exit, bears sell the close. 52, an inside bar, a low one short, but probably a scalp. 53, disappointing. And then 54, a reversal up. Good for the bulls to get, some sort of reversal, but it's a micro channel from 47 to 54, so it's not great. 55, a doji bar, disappointing follow through, but expected. If you're willing to scale in, you buy more below 54, and then you probably get out during 59. And then, it's hard to sell 62, 63, 64, 65. Maybe you could take the short 65 for a new low, but I don't know. It's not really my favorite thing to do. And then obviously reversal up 68, but I don't think that's a great trade. And again, if you took the buy above 68 and you lost on the trade, then that's probably not the trade for you because you don't have good calibrated expectations on it. Realistically, you got 3 legs up, 68, 71, and then 73. So you probably got to start to look to get out. And if you're thinking to yourself, well, I don't want to get out, I haven't made much money. Well, you took a trade that doesn't make very much money. So you kind of just have to scalp out. And then that's the end of the day. For stop orders, 12 is okay, 4 is okay. 14 is probably one of the better trades of the day by the close, or 16 is pretty good. Maybe 18, maybe 32, 33, 34. and get out below 48, maybe you could sell. It was one of those days where it looked like a trend day, but there wasn't a ton of great stop orders. On the daily chart, also, if anyone has any questions about any trades they took on today and they want clarification just in general on the type of trade they took and what they should be expecting from it, and if that you lost on it and you want clarification on why you think you lost, if it was a good trade, bad trade, whatever, just feel free to leave a comment. I'll get back to you on it. But 3 bars up, we're probably going here. We might pull back first, but I do think we're going here. And we're probably going to get back to a new high. I don't know if we pull back first. We should move relatively, I think we'll probably get to 6,100 and test this. I don't know if we get all the way up here immediately, but I wouldn't be surprised if we got right up to this area. The weekly chart, a bull bar closing near its high. Good for the bulls. We're probably going at least a little bit higher. And then, but this is actually kind of a good example. This is another one of those bars where it's a good looking high too for the bulls, but how high is this really going to go? It's probably going to look something like that trade bar 68 today, where it's going to drift higher, but you're not going to buy above this and get 3 times your risk or something like that. Really, on the weekly chart, what I would be watching for, it's difficult to time tops in the stock market because it's obviously in an infinite bull trend for all of time, right? So the moment the stock market is not in an infinite bull trend and it crashes to 0, then nothing matters anyways because the whole world has collapsed. So like you should buy the dip all the way down to 5,000, 4,000, 3,000, 2,000, whatever, because if the stock market goes to 0, then there's no financial system anyways, and it doesn't matter. But anyways, I would be looking out for the breakout above a bull channel. So if we break out above this bull channel, you could argue it's 1, 2, 3 legs up and then 2 legs down. Maybe we get a breakout above. But if this breakout above the bull channel starts to fail, then you could get a pretty sharp reversal down. Good example of that. Where was it? Okay, hold on a second. I got to turn off Globex. But this day, bull channel, breakout above, tested the other side, and then we got a reversal down. So something to keep in mind on the weekly chart over the next coming months. All right, that's going to